Good evening, everyone. Welcome to the chat, to the stream. Just doing some sound checks. So give me a second. Chat to the stream. Okay, fantastic. Welcome to this members only chat, folks, and we'll start in about 3 to 4 minutes time. I don't know how many people will be here late on a Friday before the weekend, and it's members only. So as we don't have thousands of people coming in here, it'll just be a fairly small group. I'm just going to go through some of the currencies today and then also look at energies and Bitcoin and metals, and we'll cover the stock markets as well, of course. Big rally yesterday and this morning after market, and we went long on the German 30 yesterday. If you've been following me on X or in my private group, you'll have seen this trade that we took at the bottom at the end of play at yesterday's close. We're now about 500 points up in profit on that already. What a big, massive move. But we'll come to that shortly. Of course, the NASDAQ and the S&P are moving up as well at the same time. So folks, if you're here in the chat, and I can't see when it's a members only chat, I can't see who is here and who's not. So if you are here in the chat, please indicate that you can hear me and see me. That would be great. Thank you very much. Just to make sure that everything's clear. All right. I've actually just made the video public and live to the public, just in case there are a couple of people that asked me some questions, and I realize I can't get into the live stream if it's members only, so I've just made it public. So welcome to the stream, everyone, and we'll start in a couple of minutes. Thank you, Carlos and Powell. Okay, I'm going to have to read the chats on this side. Strange Software. And Saeed, welcome to you as well. Welcome to everyone here. And as I said, I've just made this public. So if you're not a member, you snuck in at the last minute. Well done. Because there were a couple of folks that asked me some questions about natural gas, which I'm going to reply to in this video, which people didn't... if they're not a member, they won't be able to get in. So this will be the last chance that I do this. Welcome to all of you. Thanks for joining us at such late notice on a Friday. Markets are moving, and we need to look at what's going on quite quickly. And today is triple or quadruple witching day, which is another whole thing, which we have to pay focus on and pay attention to. I'll talk about that a little bit later on. And that will affect primarily the stock markets and some of the stock names, and some actually right across the markets. So when those options expires, barriers are lifted from the market, and the market can, if it hasn't done so, at the end of play by today, it will have the chance to get through there and take out some of those levels. And that could be above us or below us on the stock markets and some of the other futures and equities markets, so we don't know. But it's triple, quadruple witching day today at the end of play. And can those options call and put walls and barriers be broken by the players that be? Looks like we are trying. We've got some movement going on. So let's get straight into it. And whilst we're on the stocks page, I'll just start with this. Now, we had a big sell-off over the last couple of days. I'm just going to refer to the NASDAQ. Look at Coinbase on the bottom left-hand side. I'm going to refer to the NASDAQ here and just show you what happened over the last couple of days. Essentially nothing really. We've got two short positions on here, one from over there and one from over here. I do apologize for the cursor not working adequately on the software. It's something I'm still working on. But since our first entry tranche, that was a long time ago now, 13th of May, and we're now 20th of June. So over a month ago, we took another short position quite recently, a few days ago, about a week ago. And yesterday, we had a big rally back up after hours, actually essentially today in after hours. Now, if you're looking at your chart directly from the futures markets, directly from the NASDAQ, sorry, I'm just seeing something over there. You might just not be seeing this because the market's not open yet, so this will gap up on the futures. And what we'll see is then either a continuation of this, considering, as I said earlier, it's options expiration day, quadruple or triple witching, and options expiring across a wide variety of markets, including the equities markets. Now, I don't know where those barriers are, but I'm guessing right at the top here and just below yesterday's low, considering the huge rejection. We could draw a line right at the top here, and I don't know if it's at that spike or this one, but let's just draw it right at the top. I'm going to duplicate that line as well and put it right at the bottom, and I'm going to assume that the call and put walls are more or less at these levels, just outside these levels. The market's intention and the market maker's intention and the big hedge funds, whales, institutions, whatever you'd like to call them, are going to try and exceed one of these levels today, no doubt. If they manage to do that, then they will be paid out depending on what options collection they're holding. For those who are holding calls at that level, they may well be paid out if the market's able to push up there before the close of play today, and the same on the lower side. Those two levels are 22,000 round, roughly. I'm not going to add on the sort of dollars and cents here. At the top, 22,000 round, and at the bottom, 21,430. And those are the two levels. I'm assuming the tagline for the email was "Where Dem Witches At," and it's a take on, I think, the rapper version of "Where Dem," I'm going to say, bitches at. I just thought it was very funny. So that's where we are today. Options expiration, markets trying to bounce off the top there. That bottom being well protected, and I guess the top is as well. We'll see the same thing on the S&P. And really what we've got to do is wait to see what happens. I'm short on both of these. I'm also long on the German 30. I'm going to talk about that shortly. But I'm short on the S&P, short on the NASDAQ. We could draw a very similar sort of structure here on the S&P, although we don't have a very close proximal support level that we've bounced off. Maybe it's a little bit lower. I don't know. These levels aren't as clearly defined as the NASDAQ, but somewhere up above this high, somewhere down below yesterday's low are probably, in fact, why don't we just draw those in like we did on the NASDAQ? Those are probably the areas where those strike levels are for the options. So let's just draw one in at the top, and that's at about 6,000 really. We know that the 6,000 number is being heavily defended, and I'll take this one down and put it underneath where we are at the bottom and defend it over a number of days actually. This level is actually really important and quite crucial, the one at the bottom here. I'm just going to zoom in a wee bit, and you can see how many times that level has been respected on both sides over this last period, over the last month and a half. So perhaps that's also where the put walls are, at 5,920, and the top level here just above 6,060 or so. So maybe those are the two levels on the S&P. You can see that bottom level, once again, like the NASDAQ, heavily defended overnight. Some good news coming out here and there. In the Middle East, for example, a delay in the imminent attack on Iran by the US, delayed by 2 weeks, possibly by 2 weeks, but at least a grace period of 2 weeks wherein this strike might be reevaluated and negotiations might commence or continue. So that's where we are in the Middle East. That's where we are in the options. It's Friday afternoon, my time. It's going to be Friday morning, and the markets will be open shortly in about an hour and a half. This thing will start going. It's OPEX Friday. It's a big OPEX. It's triple, quadruple witching. We're in the middle of two big wars, and the markets are jittery. We've been going across the page for 6 weeks now. No up, no down. The S&P is exactly where it was 6 weeks ago. We also went long on the German 30. And by the way, before I go to the German 30, let's stick with the US equities. I missed the Coinbase buy. Unfortunately, we were long on Coinbase. some days ago, if you remember. We've been buying down here, we got out somewhere there, we bought a little bit, got out for a tiny profit, if anything at all, and then we missed that big rally. Some of my private members were saying trading is so frustrating because you can be in this long trade, and this one, for example, on Coinbase, took about 13th of May, over a month at least, a month and a week and a half, almost 6 weeks, for us to get to this top of the channel line, trade sideways all of that period. And if you're holding a long position, particularly if you're a retail trader holding a long position on Coinbase, paying the overnight swap fees, you would have been very frustrated and possibly got out of the trade like I did and missed the long takeoff. That's what happened, and we missed it out. We missed out on it. I was actually watching MSTR, if you remember. I had my MSTR chart in this position on my page, and I have only just switched it for Coinbase. Perhaps we'll get a chance to buy on dips on that, I'm not sure. But we talked about the NASDAQ and the S&P, being short on those, excuse me. But I'm also long on Tesla, ARC, and NVIDIA, and I'm happy with all of those. And a lot of people will say to me, well, how can you be long on Tesla, ARC, NVIDIA, but be short on the NASDAQ and the S&P? It's a particularly good question. And really what it is I'm playing each chart individually, playing each chart by itself. They all look very good, those longs on those names. And then the indices have been looking very dodgy. So I'm playing those charts by themselves, and they've been looking rather bearish. So it's a kind of a hedge almost, I suppose. We've got longs on some of the names, but shorts on the indices. But another hedge or mix or consideration to throw into this mix is I'm also now long on the German 30. Right at the end of play yesterday, as we touched that 50-period moving average and the support level that we're currently trading at down here, let me just show you where that is, at these levels down here, all of this consolidation support, that previous swing high. We got into a long trade very close to the close of play yesterday. I can't remember the exact price, but around about 23,000, perhaps slightly below that. We're now trading at 23,400. We were at 23.5 a little while back, so already in really good profit on this one. And despite, once again, the fact that we're short on the US equity indices, we're still long on the German 30 and long on a couple of names. So a bit of a mixed bag, but of course being hedged, we were hedged on the NASDAQ and the S&P. We've removed the hedges now, and by hedging, playing different instruments, mixing it up, going long on the charts where we think the charts look good, going short on the charts where we think they look bad, even if they are in opposition to each other in general, sometimes things move different to each other. For example, we've been long on silver and short on gold for about 2 months now, I suppose, almost 2 months since gold hit its top. We'll get to that just now. And we've made profits on the short gold positions, and we've made profits simultaneously on the long silver positions. And that just shows that you can be in two correlated instruments in opposite directions and make money on both. So long story about all of that. So yeah, so I'm just going to let Harley out again. All right, Harley is freed. Harley the rescue dog. Right, so that's it on equities, I think. I'll circle back to the questions if there are any on equities. And let's carry on moving across to Bitcoin, Ethereum, XRP. Those are the only 3 crypto plays that I'm currently trading right now, and I'm long on all 3. I do like the way crypto reacted this morning very early, getting a little bit of a bump. Actually, it doesn't look like much, but we did rally up from the bottom yesterday, or this morning rather, very early at 104,278. And we got up as high as 106,500 and something. So a $2,000 rally, $2,200 or $300. If you take it right from the bottom a couple of days ago, we've rallied up by about $3,000. So looking pretty good. I do like the way this is curling up, holding the 50-period moving average, holding this very crucial but skinny support level that I've drawn across the page here. Very crucial level, very similar to what the crypto Moab level was. Very funny that we've been talking about Moab, mother of all breaks, stealing the acronym from the US military. And right now, as we're speaking, there are Moabs being delivered to various Air Force bases around the Middle East for potential delivery to their destination in Iran at the deep underground nuclear reactor. Talking about Moab, mother of all bombs, that's called, mother of all breaks. So we've had a mother of all breaks on the dollar index, on oil, and also on crypto. This was the level prior to that at exactly 100,000. And we also had one down here, this big red one. And I do believe that this level that we're at right now, at 104, this sort of horizontal level where the 50-period moving average is pretty crucial. Not as big as some of these ones below us, starting at 100. And then, of course, this big red trend line where the 200-period moving average is, that's always in sight and always a danger zone. And that's below 100 down to about 96. So here we are, stuck in between the 20-period moving average, that's the green line on top of the candle, and the 50-period moving average, that's the red line underneath the candle, and we're stuck in between, approaching the 20-period at the top, trying to break through. I do like the structure of this chart, and my target for Bitcoin remains 163,000, which is the 1.618% Fibonacci extension of the prior move from the top to the bottom. So that's where we are. I think Ethereum still looks good. I did speak about this in yesterday's video and live stream, the previous live stream, that this all looks a little bit too neat. Big move, beautiful bottoming pattern there. We were long at the bottom, we're now long again. And beautiful bottoming pattern, ledge up, beautiful rally, sideways movement, bull flag, and the next move should be up equivalent to about $1,200 above us. But it's all a bit too neat, and I don't like these very neat chart patterns, and very often the objective of the charts and the markets and the market makers and the gods that be in this wicked game that we play, the intention of them is always against you as the retail trader, and the intention is always to try and cause as much pain as possible. Not really, it's not a living beast or being, but it's a collective intelligence made up of pretty evil people, which is what most humans are. And so it's always there to get you, to trap you, to ruin you, to take you out, to destroy you, and take all of your money, every last penny of it. So always be aware of that. It's not your friend. The market is not your friend. The brokers are not your friend. The traders, other traders in the market are generally don't have your interest at heart either. None of them do. The people that ask for your money for courses, people that ask for your money for signals, for YouTube channels like this, none of them have your best interest at heart, mostly. I think I do. But no one does really, including the market itself, this collective mind that's there to destroy you. Its job is to destroy you. So considering all of that, and considering how neat this is, I wouldn't be surprised if Ethereum had to just obliterate a whole bunch of long hands here and spike back down into some of these levels here and create chaos. And if that does happen, we could see a similar sort of thing on Bitcoin, dipping down to that trend line, like I said. Another clear out. Bitcoin loves, and Ethereum and XRP and most of the coins love to clear people out. Could we see another sudden plunge down to the red trend line, the 200 and the 100 period moving average confluence, and that's at about 95, 96,000, very, very easily. And if that happens, don't be scared. There'll probably be an opportunity to buy the dip, which is what I'll be doing if that occurs. Now, on gold and silver, we're still short on gold. Once again, I'm going to repeat what I said in the last 5 videos. This picture pattern page is something that you've seen multiple times right now, and nothing has changed since we've drawn in these pictures, and we haven't changed any trade positions. We haven't changed our view. Well, I haven't. Why do I say we like it's the royal we? It's just me and my team over at ArcisFX. But basically, I'm waiting for this to move down. Target is $3,000, $3,000 plus minus a little bit above or below, and maybe even 2,700 or 800 down here in these big order blocks and the breakout area from the previous rally and consolidation. So if this doesn't happen and we break out through the top, I'll just simply hedge, waiting for another opportunity to sell. Gold will at some point come back, consolidate, retrace, and build up some more liquidity, gather some more volume. All those things that markets do all the time, gold has to do it at some stage. It might be now, I think it will be, but if it's not, we'll do it later, and we'll have to hedge and then do the same process once again. When we hedge, let's say we're short on gold now, and I take a long position, I hedge all of these shorts. Let's say it breaks out through the top, and I hedge all of these short positions, and I'm not full up on shorts right here. I've still got some space to add some more, but let's say I don't add more shorts, and we hedge if we start breaking out through the top there and close above that level. And we move up, let's say $500. When we moved up $500 and we're clearly topping again, at some stage we have to top on gold, we move up $500, I take profit on that long position, which I use to hedge the short positions. So I take that full $500 profit on the same size position as these short positions that I've got down here. And then at the same time, I do or may have the opportunity to add some more shorts on that at that time, and using the profit from the long hedge position to mitigate the risk on the new short position that I've just taken. I must emphasize as well that there's another opportunity to exit your hedge. You don't have to do it like that. That's the most risky way, because once you've got out of your long hedge, you're fully exposed to the short side. You're still holding these shorts and you're adding yet another short on. So if you don't have the position sizing to be able to do that, and you should probably start out by considering that as an opportunity or an option later on and size accordingly when you start out with the trade. But if you can't do that, then simply wait for the market to move up and all the way back down to where you hedged. Get out of your hedge. Let's say it's at the top of the screen arrow about this level, and we hedged and it went up and up and up, and we're holding on to the hedge. So we're long and we're short simultaneously, locking in the losses from these trades and locking in the profit from the hedge trade. So no gains, no losses, no matter what the market does, and your swaps will roughly cancel each other out because one's long, one's short. And then when the market comes all the way back down to this level where you initially hedged, you can exit that hedge for no gain and no loss and just resume the trade as if you had never done that and you were just short from these original positions in the first place and we had never rallied up beyond that. So different ways to exit your hedge, or you can do it gradually, bit by bit, exiting as you go higher, adding shorts, or you can exit as you go lower. Once you've reached the top, start exiting your longs bit by bit as you work your way back down towards the original long entry point. So all sorts of ways of doing it. At the same time, we're also long on silver. We have been long on silver, short on gold for many weeks now, and we've taken profit on both of them many times now. One long, one short, both metals, both correlated, highly correlated, but trading in slightly different and opposite directions currently. So we're still long on silver. Our original long position was down here at 32. We took some profit up here, where we're currently right now, basically, and we've just got long again, more or less at the same price. And my target on silver is all the way up at about 37 and a bit. That's the first Fibonacci extension. I haven't got it drawn on here. I think about 37 and a half. We almost got there, you know. We got to 37.2, but it's about 37 and a half. Beyond that, about 43, right up here, and then the next target is around about 50 to 55. I don't know if silver can do it on this occasion, but I think it's going to give it a damn good chance or try. So let's see how we go. We're also long on copper. I thought copper was going to defeat us at some point, but we're still long on copper. There's our long position, and I do like this position as well. Once again, with silver and copper, I do think these industries have got great opportunity to grow into the future, all involved in electricity, AI, computers, chips, etc., batteries, cars, all EV cars. So silver and copper, I think, have got a bright future ahead of them, a shiny future, and we're long on copper. Holding the 100, the 50 period moving average just where we are right now, and the 200 period moving average just below there, and holding that big order block that we cleared down to with Liberation Day and bounced right back up again. So if the economy manages to keep going like it is trying to, and maybe we get a couple of rate cuts, it seems like we're going to get 2 rate cuts this year still, according to the Fed. That might only be 0.5%. By the looks of it, it'll be down to about 3.5, 3.75 by the end of the year. And we could see all of these things, especially gold, copper, and silver, getting a bit of a bounce in alignment with that. So energies now, okay, I know you're all champing at the bit. Let's just finish off. Let's just clear out uranium. We're out of uranium. We haven't got no positions on uranium. We have no positions on uranium looking to buy back into these dips. I'd refer you to yesterday's video and the previous live stream where I've covered uranium in some detail. I'm not going to do that right now. We're still long on UEC, having added a new long on quite recently, looking for this to move up much, much higher on URA too. But I'm basically looking for URA to come back down to about 32 or just below 30 for us to get back long on that again. Now, natural gas. Let's start straight away with natural gas. I don't know if when we got short here, whether it was before or after yesterday's video, but I think it was afterwards, and we sold at that Fibonacci level right over there. The market since then, this is a daily chart on natural gas on the Henry Hub price at Black Bull. This is a daily chart. Since then, we moved up back into the order block, very clear and definite order block right here. We tested the underside of it and collapsed right back down again. Let's have a look at the 4-hour chart on the same thing. And this is the Henry Hub natural gas price on the futures price, the current front month over at Black Bull, my broker. On the 4-hour chart, we've got a big shooting star candle, big massive spike high. There's our average short position right there at 3.95, 3.96, I think mine is, 3.963, something like that. but we've got it recorded as 3.95. We're currently trading at 4.05. We're 10 cents out of the money. We don't have a full position on this. This candle is shaping up to be rather magnificent, and it closes at 4 o'clock my time, which is in 1.5 hours time. We won't do anything until 1.5 hours has elapsed and this candle has closed. But if it looks like this, I will consider adding some more shorts onto my existing short position with an average price of 3.95, 3.963 in my case. And that means that we'll have an average price once having added on some more at the top of this candle. If it stays something like this, well, our average price would be about $4, and we'd be looking at a reasonably decent sized position, riding that position all the way back down to $3. And if this head and shoulders pattern works out, which I don't think it's going to, and I never rely on head and shoulders patterns, but it's looking more and more possible that this is actually a head and shoulders, and the target for the head and shoulders goes against what I believe the target should be. The target for this head and shoulders pattern will be down to about 2.5, maybe slightly below, down into these levels down here at the bottom. So if that works out, it will be defeating my overall view of the market that we should stop and hold support at $3 and not go below there much at all, maybe just small occasional spikes, but very few and very little. And that we should hold that level and then roughly trade for the rest of this year between $3 and $4, maybe $4.50, maybe $4.70, but generally $3 to $4. If this head and shoulders works out, we'll be well below $3. We'll be into the $2, $2.50, into the mid twos, I was trying to say, and that would be well below what my estimation for this is. So not only do I not like head and shoulders, I don't like the way this one's structuring and setting up. And if it does seem to work out to be a head and shoulders, then watch out below. But that's not my favorite plan or strategy. So we're short from just below $4, looking for this to move down to $3. My contract rolls over at Black Bull on Monday next week, Monday or Tuesday. I think it's Monday. Could be Tuesday, actually. I'm going to have to double check that, but my contract rolls over on Monday. I'm hoping to be able to get out of this before the weekend and at least take some small amount of profit and then look at getting back into this next week. I won't get back into the futures next week on Monday. I'll be trading the continuous contract at Pepperstone because I don't like to trade the futures during rollover week. Once the rollover is completed and over, a couple of days have passed, I'll normally then close my continuous ETF position at Pepperstone and move back into the NATGAS F futures contract the front month at Black Bull. So that might all sound quite complicated. It's not really that complicated. Basically, I'm short on natural gas, looking for a target of $3, and I'll try and take some profit this afternoon because I don't want to hold this into the weekend with Iran going on, and also my contract rolls over on Monday. Well, I hope that's all sort of clear. And then on WTI oil, well, we're still short. Nothing has changed. We've been short since this last position about a week ago, and we're still short. Top of the channel, all looks fantastic to me. I have no reason to believe that this will burst up through the top of the channel, and I like the way this traded yesterday. Nice reversal candle through the top, a bit of a spike, bit of a clear out there, just scaring some of the bears rather, up into that green resistance level, an important line which I've got drawn on there, and we topped at that level, just below the order block. We moved down and trying to move down now. The day before was a hanging man. That makes this a one down, one up reversal candle pattern with a previous spike low where we got short at the top of the channel. So I'm still pretty confident that WTI will move down, despite everything that's going on in the Middle East, despite everything that's going on in Russia and Ukraine. We've been selling WTI oil for the last 2 or maybe approaching 3 years now. Despite all of these things have been going on throughout that period, this is not a new war. Russia and Ukraine, Israel, Hamas, all of that's been going on. The Houthis, the Straits of Hormuz, all of that sort of stuff's been going on for 2 years, and yet the price of oil has continued to come down. The price of natural gas has continued to go up from the very low levels, of course, down below $2. So that's where we are, folks, on that. And then going across to this chart, this is the rand against the dollar against the South African rand. It's not much to talk about here. Basically, I'm expecting a short squeeze on this. I covered this in previous videos on multiple occasions. We're also long on TLT, 2 tranches on this. One's slightly in profit, one's out of profit. We're not even at break even just yet, but I'll probably look to get out of this. I know everyone's expecting treasuries to have a massive short squeeze at some stage, Maybe that's the case. Maybe that's true. Maybe I should just hold on to that position. But it's been just a very long, boring process, and it's tied up capital, which I could have used elsewhere. Right, on coffee and cocoa, cocoa has now broken down fantastically through the support, and we're still short and still aiming for the bottom pink zone where we see a bit of a bounce in the red arrow, still sort of aiming down for that level down there. So we've broken down into the sort of pink zone so far today. A bit of a gap down. We might have to just bounce up and close that gap, but all on track for a move down to about 7,000. And then on a breakdown below there, at a bit of a bounce, a bit of bouncy all around this bottom here, down to about 4,500 eventually. And then on coffee, the other one that we're trading in a similar vein is also moving down. We have not taken profit on this yet. We've still got half of our position on here, having taken some off there at the bottom and missing out on the opportunity to resell when I should have really. We got so close, but I didn't resell. We had two chances. I missed them both. So we've now only got half a position on, but we're moving down to the channel center line. I think we'll see a bit of a bounce here at around about 325. We're just about there right now. Maybe I won't hedge this or do anything right now. Let's maybe wait for the bottom of the channel, and then I'll either hedge or exit, probably hedge it there, and then unhedge at the center of the channel again, waiting for this and anticipating this breakdown down to levels into about 240 to 300, something like that. So that's coffee, and that's looking pretty good. Coffee and cocoa, just going along quite swimmingly, really. We're also long on corn, and we're long on cotton, and I just actually unhedged. We had a hedge on our corn longs, and I unhedged that. On that breakdown below this horizontal line, I hedged it. I've now unhedged it. We're still long on corn, and we're still long on cotton. And I think these are probably my two favorites, actually. And there's cotton, big turnaround there, spiky, break up, smashing around, big reversal, double bottom, messy break through the top of the channel, sideways, holding a very interim support, but an important one nevertheless. I'm going to clone this and move it down to where we are holding support right now. Just draw a line there, just so you can see it. It's a pretty decent support line, although it's very tiny, and we're holding there right now. We have 4 tranches on here, all quite small. Two of them in profit, 2 of them just out of profit. So that's cotton and corn. And then, and we talked about coffee and cocoa. We have nothing on orange juice, nothing on soya. We're still long on sugar. Sugar actually is also one of my favorite plays, even though it's been very tantalizingly annoying. We're still long. We took another long tranche a few days ago, and we're right at the bottom of this falling wedge and channel, and I expect we'll get a sharp short squeeze on sugar. And the other one was wheat. Now, if you didn't get long on wheat, we're long from down here at about 540, currently trading at 590-ish, just below 590, and we've broken out through this long falling wedge, very, very long-term pattern. I expect we'll have a big short squeeze up to about 750, these lines up here, and we're just getting going right now. That's fantastic. It looks great to me. If you didn't manage to get long, wait for a dip back down to the trend line, probably at around about 570 to 580, maybe slightly below there. We could get down as low as 565. Those would be great areas to buy wheat for a rally up to my target right up here, about 750. Phew, and that's it, folks. Now, I'm sorry, I'm going to have to turn to this screen to read the comments because for some reason they're not showing up over there. So welcome Carlos and Saeed and Powell, not Jerome, a different Paul. Good day, Edgar. Good morning to you too. Good day, Steve. M1N1, loud and clear, Blue Jail. Lovely from tropical London. Yeah, it's strange, isn't it? London can get so hot and so unpleasant and so tropical. Have a nice weekend, James and everyone. Thank you, Martin. I appreciate that. Like and subscribe, everyone. Yes, thanks, Steve, M1N1. Missed the re-entry into Cocoa. Yeah, so to re-enter Cocoa, Steve, I don't know, mate. Yeah, so I don't know. Maybe back at the top of the breakout point. Maybe this gap's got to be closed, Steve. So back up to there, I think it would be great. Up to about 9,300-ish. Just to close of that gap, maybe a little probe higher, maybe 9,400, something like that, for an addition if you want to add. I didn't add any to my cocoa position or my coffee position, unfortunately, but maybe we'll get another chance later on. Who knows? But so far, it's looking pretty bearish and moving down quite fast. Maybe it just won't recover or retrace. Does it make sense to short WTI oil right now? Yeah, I think so. NK Upal. Well, I'm short. I'm short from exactly this level, actually, from this price. 73. 73.5, something like that. Greetings from Poland. Difficult to pronounce your surname. Roda. Is it Paul Roda from Poland? Nice to see you. Yeah, so I think it's a good place to, I'm short, so I'm not recommending that you do what I do or that you, take the same positions, but I'm short and from this current price. Now, natural gas is moving down. You can see natural gas. This is I did actually mention the continuous contract here. I want to show you something interesting quickly before we finish off. This is natural gas at Pepperstone on the continuous contract. And you can see we've also got that order block here up on the day chart. This is not a futures contract, it's an ETF. So it's made up of the front month, the next month, a couple of other things, a spot price, a few other things, a bit of a mix, bit of a newt's tail, bit of witch's blood, and the hair of a frog's wart. Mix it all together and you get a price, and that's basically what you've got here on the Pepperstone natural gas price, and all of them, including Oanda, sort of make up, and it's not always clear what goes into this price. But what is interesting is that we have the same structure here, up into the order block, poking up through it. We actually got to the top of the order block here on the continuous ETF, whereas on the futures, you can see we just, let me just quickly show you, we got to the bottom of this order block, right? So on the futures, we got to the bottom of an order block, not exactly the same order block, whereas in the continuous price here at Pepperstone, we got to the top of the order block, poked through it, and faked that order block out if you want, and then moved down, and we're moving down a wee bit now. This is a day chart on Pepperstone. So pretty similar structure, and there's the $3 level at the bottom. So we have a ceiling, a floor rather, at $3 on the Pepperstone continuous price, the ETF, and we have a floor at $3 on the futures price here at, it's essentially the Henry Hub futures price, which we're getting from Black Bull. And there's the $3 level here, this triple bottom. Very, very key, important, and strong level. Not only is it a triple bottom, but it's also a multiple top on prior occasions. So let's just scan this back. Actually, probably looking at a weekly chart would be easier. So the $3 level is absolutely vital, critical, and key, and it's that line there in the middle of the chart, the thick red line with the end of the green block, the top of the green block. That's $3, very, very important level, both support and resistance, and I do believe the price will want to return there and retest that level, and on that retest, if this head and shoulders pattern is real, which I hope, and I don't think it is, but if it tests there and the head and shoulders pattern is real, then we'll get a head and shoulders breakout and we'll move down lower. And I can actually draw that in for you. And I'm drawing it in out of interest, really from about this level here. So if we got a sort of a right-hand shoulder, there's the shoulder line down here, something like this. It's not beyond imagination that we'll just get something like this. And voila, we have a head and shoulders. Now, I'm not saying this is actually going to happen, and I can't remember exactly where the bottom of this would be, but it's certainly not at $3. $3 is the kind of shoulder line, neckline. See what an important level that is. If that breaks, we're probably going down to 2.5 and probably below 2.5. So all eyes on $3. It's a super, super important level. And I think because of that, the market will want to try and retest it one more time. And that might be fairly soon, or it might not be, I don't know. Going back to the day chart, going back to the 4-hour chart, beautiful rejection there, turnaround. And we've also, we shorted right at the top here, basically on the futures. That price there that you see, that red arrow, that's my average price. But we shorted right at the top here about 2 or 3 hours ago, and I added that to my existing position from slightly lower down, and that's my average short price on natural gas. But we got short right at the top here at can't remember. I'll find out. It's in my chat. I think it was 4.11. and we're trading at, and we got as high as 4.13 at the peak. We're now down at 4.03, so that trade that we've just put on is already now in 7, 8, or 9 cents profit. But we had an earlier position from lower down, and that position is now added to the one that we've just taken, and that's our average price. So we're still not in the money on natural gas, but it's looking good and it's moving down. This 4-hour chart is showing some sign of good momentum and good movement in the right direction. That's what we want. So remember what I said, folks, $3 is absolutely key to what happens to natural gas. And if we do, and if we are so blessed as to get a chance to revisit $3, that's going to be where all the action takes place. Either that's going to be super strong, super firm, and we're going to see trading above there for the rest of the year, something like that, or it's going to give way and we're going to see 2.5 and maybe 2.2, 2.3 if that head and shoulders pattern forms, and $3 doesn't support the price. So really important, and make sure that you... Yeah, thanks, Ben. It's an interesting story about this surfboard. I found it in a second-hand shop, and it's a very famous board, and I bought it for almost nothing. And it's a wooden fish shaped by Surf Tech, and I don't know all the details of it completely yet. It's never been ridden. It's brand new. It's got a few dings on the tail, minute ones, which I've already fixed. And it's basically a collector's piece. They sell, and you can go and Google it yourself. This Surf Tech 5.8 Soul Fish, I think it's called, with a particular fin system, which is also very expensive. Costs about not $500, about $150 just for the fin system. But the board itself, I think, is worth about $1,200 to $1,400. And I paid about, I don't know, $100 for it, something like that. Maybe slightly more than $100. So that's that board behind me over here, that surfboard in the back. Very pleased with it. I've got to take it out surfing at some point. I don't really want to. It's a bit of a collector's item. It's never been ridden. It's got no pressure dings on the deck. Never had wax on it. It's absolutely beautiful. So should I ride it or not? Let me know what you think in the comments or in the description. Folks, that's it for today. I'm going to end a little bit early. I don't think there are any more questions, but if there are, Paul. Oh, thank you, Paul. It said Paul. Appreciate that. What time does the NASDAQ triple witching today? At close of play today, Fariba. Close of play. That'll be... well, I don't know. Depends what... I'm just trying to think. I was trying to be a little bit smart and trying to figure out what time that might be in your time zone, judging on your surname, but you could be in the US, I don't know. But at the close of play, when Wall Street closes today, that's when the witching ends. Or when those options, when all of those contracts expire, basically if you're on the wrong side of the contract, you're going to lose the money that you paid, the premiums you paid for the options. If you're on the right side of the money, you're going to be on the correct side of the strike price, and you're going to be paid out your premium, whatever it is that whatever option setup you took. So that all happens, and those are big levels to be defended. We talked about the stock markets and how these levels, it may be the levels that I had drawn on here, or it might not be. I don't know exactly where these levels are. You can find out. And in fact, in my private group, there's someone who has a subscription to one of the options flows channels, and they have these numbers available. But I'm just estimating based on these charts that there are big barriers above and below, quite close together, where we are in the S&P and the NASDAQ. I've drawn those out before. If you haven't seen those levels, you can see them on this chart right now, but I went into this in a little bit more detail at the beginning of this session. So yeah, so we're still short on the NASDAQ and the S&P, long on the German 30, long on Tesla, long on RK, long on NVIDIA, and let's see how we go. I missed out on the long coin trade after being in that trade long and eventually getting out of boredom and frustration like many others would have as well. It finally got its going up. Yeah. All right. Folks, I hope you enjoyed the live stream, and I hope it was useful and helped you with your trading. I've got some pretty exciting things coming up, which we're going to be announcing this weekend and next weekend. And I've got a trader's survival kit, which I'm giving away free, including videos and books and music in a sort of a package, which I'm giving away free. And we'll be announcing that this weekend or early next week. But it's going to be kind of limited to start with. Make sure you've joined this channel if you want your gift bag of goodies, the Trader's Toolkit. And in there, there are videos on risk management, very specific things which I've made just for this toolkit, including my curated list of songs which I produced and curated myself for trading, and a couple of other goodies and some PDFs and that sort of thing. So make sure you've joined this channel. If you remember, you'll be getting first dibs at that. There's a join button below, but if you don't want to join, it costs $1 a month, that's all, and you'll get access to all of these sorts of perks. But if you don't want to join, please at least subscribe. Just press the subscribe button. I'm not going to bother you with junk all day long. You're not going to get all sorts of rubbish sent to your YouTube inbox feed. You'll just get good basic trading stuff that we do all the time. So just please subscribe. It really helps the channel grow, and we appreciate it very much if you do that. And also give the channel a thumbs up, this video a thumbs up specifically. And I'll see you in the next video, folks. It's Friday, and I'll probably do a video on Sunday as usual, so keep your eye out for that. And then, as usual, we'll have a live stream again on Monday.